Welcome to Volume 5, Issue number 7 of the Milestone Investing newsletter. And this week's ex-dividend date is the 13th and the 14th of February 2019. Let's look at this week, what's going on. We've got 5 companies paying dividends. TUI, a German travel company, Royal Dutch Shell, British Petroleum, Unilever and Hargreaves. Between all of them, they're paying out £7.3 billion in dividends, 3 billion from Royal Dutch Shell, 2 billion from BP, that's 5 billion there right there. Unilever, nearly 1 billion, and then the remaining coming from Hargreaves and TUI. TUI is giving you the smallest amount of money. TUI is paying a dividend of 6.7%, that a derivative of 6-7% for us. And for non-professionals, this is what you can expect. 33 for TUI. Let's look at TUI. TUI AG, so TUI Group is the world's leading tourism business, consisting of a large portfolio of strong tour operators. TUI operates 380 hotels, around 150 aircrafts, and 16 cruise ships globally through ownership, JVs, management contracts, leases, or franchise, and maintains a strong position in the growing tours and activities market with 150,000 excursions and activity offerings. The boss is Friedrich Jussen, or Jussen, however you say that, and Horst Bayer. There's the CFO. They're number 59 in FTSE 100, and they are worth £6.8 billion. Okay, now this company pays dividends once a year, okay? And they were known as TUI Travel prior to three years ago. And when they changed their name to TUI AG because they bought some other companies and stuff and it became another brand, the FTSE the charts on IG only gives you 3 years data. So I'm using those 3 years data to tell you what's going on here. So in the last 3 years, you would have had 3 opportunities to trade your stock. And all 3 times it would have taken you, had you gone long, it would have taken you more than 1 month to get your money back. Or on all 3 occasions. It would have been, so I'll tell you the exact number of days. 77 days, 168 days, and 240 days to get your money back. Okay, had you gone long. Had you gone short on day 1, once out of the 2 times, you would have made a profit going short on day 1, which is 33% of the time, okay? And your profit would have been 7%. It would have made a 7% drop, okay? Twice on day 2, twice out of the 3 times, 67% of the time, you would have made money on day 2. The return on investment was anywhere was 10% and 21%. Okay, and then the third one was break even. So basically, because we know that it kept on falling, for quite a while, we know that had we left it longer than 2 days, we would have made even more money. So I don't think I need to tell you the obvious, but if this company has never given you your money back in the last 3 years, within a week, do not go long. This is a perfect one for going short. Now, look here. It says here that it goes ex-dividend on the 13th on Wednesday. So tomorrow is the day that is going to be the qualification for the dividend. And on Wednesday, I would short this on Wednesday. If I was doing it, I would short it on Wednesday and take advantage of the drop. Okay, it's not likely to recover quickly, so you don't need to panic about it doing a secondary bounce. When it falls, it bounces up again and then comes back down some more. You don't need to worry about the second bounce up, but you can wait for the second bounce up and then trade on the second fall. Either way you do it, this has no track record of rewarding any long trader anytime soon. So this is a good one for shorting. and you will short it on the Wednesday if you're going to take advantage of that. Let's look at their fundamentals. I mean, how well are they doing in business? Well, in 2015, their turnovers was 17.5 billion. They dropped to 17.15 billion. It jumped up again to 18.5 billion and up again to 19.5 billion. So from 2016 onwards, they've been increasing their income quite a bit. Their profits, 466 million pounds, 618 million, 1 billion, and they dropped to 972 million pounds. I said that, in fact, I didn't tell you, but in fact, I'll show you. They are going to pay a dividend, here we go, of 364 million pounds. That's what they're going to pay. And so can they afford it? That's the question. Well, here it shows you they got 2.5 billion pounds in the bank in cash. These guys are cash rich. This is no problem for them. And 364 is less than half of their profits. So this is very comfortable for them. It's very comfortable. Okay. Now, for those of you who are going to be looking at the charts, this company has been falling pretty consistently since May last year. If we look at their profit margin, in other words, how much of their sales drops down into profit, we can see here 19.2%. All right, that means for every £100 they make or they sell, £19 20p goes into profit. Here, 16.8%, 19.9%, and 5%. So this tells you straight away there was a problem, because they were basically converting between 16 and 19%. They were converting that into profit. And then in 2018, it dropped massively down to 5%. They had additional costs somewhere because they made more money and they made less profit. They had some kind of expense they had to deal with that caused that problem. So there could be an underlying problem that hasn't yet manifested itself because they've got enough cash to handle it. But the point is, this is telling you, in terms of their performance, there may be a future challenge. So if they don't iron this out, then pay attention, because that's indicating it right there. That 5% is telling you there's a potential problem. Any questions?
Hi, Miles.
Hi, Jamie. How you doing?
Yeah, good, thanks. Just a question regarding TUI, because it's dropped so much last week.
Yes, you spotted it.
Yeah, I'm just wondering what kind of effect it's going to have on the dividend.
Very, very good. That's a very, very good question. I'm going to just show you. Let me just show you the chart. Right, these candlesticks are 1 month, okay? And you can see literally from last year, you can see it's been falling the whole time. And it started falling from June last year, all right? But I want to show you now the 15-minute chart, because something interesting happened. In fact, no, I'm going to show you the daily, because daily shows it better, because it was a big drop. Now, that's the kind of gap down I'd expect when they're paying dividends.
I think it was a profit warning, apparently.
A profit warning, well, there you go. So remember so just go back to the formula we said on the fundamentals. We said the profits times the P ratio gives you the value of the company, and the value of the company divided by the number of shares is a share price, okay? And so if you do a profit warning saying that you're not going to make as much money as they anticipated, the share price falls. So your question, Jamie, can we expect it to fall? If that's a profit warning, then this is going to be fair value. If that's correct value based on the profit warning, then it's going to fall some more.
Right, okay. That makes sense.
Cool.
Thanks.
No, you're welcome. And well spotted, Jamie. Well spotted. By the way, I was talking to someone on this line today about technical trading, okay? Where you look at the MACD, you look at RSI, you look at your Bollingers and so on and so forth, right? To kind of gauge where you are. Now, a lot of technical traders who are blind to the fundamentals, and again, I'm sensitive to fundamentals because I had an accounting background, and the fundamentals come from accountants. That's where the source of data comes from. So I'm sensitized to the fundamentals, right? But if you are a technical trader, there are some things that might happen that you can't see, because all of these charts are basically taking the past and projecting it forward. So as long as the future looks like the past, then these numbers are good. You kind of got a nice trend going on. But the dividend drop that comes on the Thursday for the others and Wednesday for TUI, that dividend drop is not calculated in the technicals. So this, for those people who don't know fundamentals at all, this is information that's going to throw you off, because you might look at this and say, oh, it's dropped, right? I can see some support here. It's going to go back up again, and it falls again because of the dividends. You can't see the dividends, and the MACD doesn't predict dividends. RSI does not predict dividends, and neither does the Bollinger. They don't predict dividends or the dividend adjustment. It's invisible. So there are some things which are invisible to technicals. Not a lot, but there are some things. And when those things come up, if you don't know about them, then you can be wrong-footed. And so that's why you need to know both. What are the fundamental things that take place and what are the technicals? Now, the reason why technical traders can get away with not knowing fundamentals is because the share price is based on the technicals 80% of the time. 80% of the time, which is most of the time, technicals is enough. And 20% of the time, fundamentals is what's at play. Now, like I said, 20% is not the majority of the time. So you can get away with knowing technicals alone. But every now and then, when a fundamental kicks in, which is important and big enough as to make the stock share price move in a specific direction, and you don't know about it, you're going to be wrong-footed. And in your case, you guys are lucky because we're actually trading a fundamental, so you know about it. You know, this technicals are not taking into account the dividend drop, so therefore you can do it yourself. And like I said, as long as the share price hasn't fallen by too much, it should fall again. And so, you know, the guys who trade like the foreign currency markets, the currency like the dollar against whatever, those guys who come from that background with that training, this stuff's invisible to them. Anyway, that was a conversation I was having, and I just thought I'd share it with you. Welcome to Volume 5, Issue Number 8 of the Milestone Investing newsletter, and this week's ex-dividend date is the 21st of February, 2019. So let's look at our candidates for last week. Who were they? Well, we had TUI. So let's go to TUI first. TUI is a German travel agent. They were actually on Wednesday, and the trading day was Tuesday. If you wanted to receive a dividend in your bank account, you would go long here. You would have received the money 26th of February. So it's basically next week. So they're basically, it's a 2-week delay, and then they're going to pay you. And they're one of the quickest. I've known them to pay you literally within less than a week. So what do we know about this? If we look at this blue line, so from the drop, so imagine we got the worst price on the red, and we went long. I'm sorry, went short. If we went short, we paid a dividend. So when you use a derivative, the derivative, you go long, you receive a dividend, and when you go short, you pay a dividend. That's the catch with having a dividend, with having a derivative, all right? And so if you went short at the lowest, the worst price at the red line, the share price would have to fall to the blue line before you made any money, because this gap is the dividend, this gap right here. So you pay a dividend and you get the dividend back as the share price falls. So when the share price fell to here, you are now break even if you pay the dividends, right? And anything below this first blue line is you now in profit. So it hugs the blue line because it's basically saying, look, this is where it should be for fundamental reasons. But we know that the market overreacts in some cases, and it's gone down below, but it doesn't quite touch our exit price or our target exit price. It doesn't quite touch it. And then basically it starts to move its way back up again. And it's kind of hugging where it should be for fundamental reasons, the blue line. In this range, that's where it should be. And it's kind of doing what it should do, okay? So that's TUI. If you traded this stock and you were a professional, you would have got anywhere between 13 and 58% return on investment. So had you traded near the green line and you shorted it, you've got anywhere between 13 and 58% after paying the dividend. So after paying and receiving a dividend back, that's what your return would be. And if you're a non-professional, you've got anywhere between 8 and 36%. So TUI reward these short traders. long traders, well, they would have received a dividend. Professionals receive a dividend of 65%, okay, of the derivative, and non-professionals got 32%, but they haven't got their money back yet. So that's basically where they're at. That's TUI.